Welcome, everyone. This is Dean Dormady with DD Ventures, and this is an overview of acquisition targets and the acquisition criteria we've used with Great Health Ventures. Obviously, we're looking for a motivated seller. Motivated seller could be, not typically younger than 50 years, but there could be extenuating circumstances as to why they may be a motivated seller. But usually a motivated seller is someone who's been running their business for 10, 15, 20 years. Their kids don't want their business and they're looking for an exit strategy, not necessarily right away, but typically it's over 50 years old and they're looking for an exit strategy of their own. How do they exit and sell this business and retire with some good money? So one of the things we always like to look at, does free cash flow cover debt service? So free cash flow is your debt service coverage ratio, or your adjusted EBITDA. Is how we're looking at it. We can get into that in more detail later. So we like to acquire companies between 2 to 5 times adjusted EBITDA, subject to due diligence and finance. So that means the quality of earnings needs to validate those numbers. And then we also like to get us at least a portion of seller financing. So whether it's 60 or a 40% seller finance, 30% seller finance, or even 100% seller finance. Contrary to popular opinion, seller finance is a great opportunity for sellers to be in the first position, whereas typically if they're in the second position, they're subordinated to the prime. Well, always they're subordinated to the primary debt of the bank. So either way, the seller finance is a great way to go. Especially when the seller wants to spread their tax liability over several years versus taking it all in one lump sum at a year. So gross margins, like to see those 30 to 50%. We want a going concern business. So we've not been looking at turnaround businesses. While I think we could do turnaround businesses, that's not the business that we're in. But we like to see a business that has strong cash flow, strong free cash flow that covers the debt service that we're buying the business for, because we want to grow and expand the business. We don't want to be in contraction or protection mode. So we typically are targeting locations. Well, actually, we're targeting all locations within the United States, specifically closer to us if possible, but it really depends on, how well the business is run, how well it's established. Are there good employees in place, good processes, procedures? We want a strong revenue business with at least a minimum of, 500,000 in adjusted EBITDA, with a revenue of over 1.5 million, ideally. And then we're looking for service businesses. A lot of banks, they want to tie you to the asset. So that's one of the things when you're looking at qualifying a bank. Are they an asset lender or a cash flow lender? We want a business that's, majority of the revenues comes from services. Now, the businesses that I've been looking at is, 100% of their revenues are coming from services. So 3 to 5 years financials must match their tax returns within a plus or minus 10%. I've not seen anything that's been drastically out of line, but that doesn't mean it's not going to happen. But it's a huge red flag if it were be above or below 10% difference from their P&Ls versus their tax return. So we also want to look at low CapEx and working capital needs. We're going to get a working capital loan with our deal, but we want to make sure that the business is a going concern business. So we're looking for motivated sellers, those that have an appetite to put some money in their pockets, but also want to, have a rollover and a meaningful portion of their equity to continue along with the organization. So outside of that, we're looking for stable cash flows, relative to low CapEx and working capital needs, favorable industry trends, et cetera. And we're looking for companies that have been in business for 5+ years or more. So that being said, that's our high level acquisition criteria. It gets us to a yes or no real quick. I hope you like this video, and please like and subscribe if you'd like to learn more about what I've done in the M&A space or how I can help you. Feel free to reach out via email or on LinkedIn.